Hello students, how are you all? So today we have come up with a new topic. So that is the goods and service tax, the accounting for goods and service tax. I know you all have heard about this term, goods and service tax, that is commonly named as GST. Yes. So what are the learning objectives from this chapter? What are we going to learn? First it is meaning of GST. What do you mean by GST? Then taxes merged into GST. What are those taxes that has been merged into GST? Because before using the GST, we used to have many other taxes, many other indirect taxes. Let's say central excise tax, sales tax, VAT, etc., were there. So all those tax has been merged into one, that is GST. Okay, so we have the GST rate structure, then we have the objectives or the advantages of GST, why GST was needed or why it has been built. Then types of taxes under GST, that is your CGST, SGST, IGST, you might have heard. Then accounting procedure, how you are going to do the journal entries or whatever recording in the books of account of this taxes. Okay, so let's start from the first. That is your meaning of GST. What do you mean by GST? GST is a goods and service tax. Okay, so from the term itself we can determine that the taxes charged on the goods as well as services. Okay, so it is an indirect tax. Now taxes are of two types, direct as well as indirect. So direct taxes are those that are deducted from your income directly. Okay, and indirect taxes are those that we pay indirectly to the government. Some taxes are there that we have to pay directly to the government, we have to pay it, and some taxes are there which are being levied by the government, which are being charged by the government from us via different items. Let's say you are purchasing something, you are purchasing a product for your use. So in that product itself there is a charge. Okay, so that charge you are not paying it extra, that is inclusive of all tax written in your MRP. You might have seen it. So those charges are those taxes are your indirect taxes. So GST is an indirect taxes. That means we don't have to directly pay it to the government. It will be collected by the government via the different commodities that we use, different products that we use. Okay. So it is an indirect tax levied at prescribed rate on every supply of goods and services except on petroleum and alcohol for human consumption. So whatever is there, whatever goods, services are there, the taxes are levied on this goods and services, supply of goods and services. Okay, so except on petroleum and alcohol for human consumption. Supply of goods means sale of goods, and supply of services means rendering of services. The supply of goods and services. So if you are selling some goods, then GST will be charged. If you are rendering some services, that is you are providing some services, let's say hospitality service or their hotel management is there, something like all the services that we need in the restaurant, the services are provided by them. So all those services you are paying for it, so in that services also the taxes will be charged. Okay, so it is a nationwide tax seeking to unify several indirect taxes and is based on the principle of one nation, one tax. So yes, it is we can say that it is the one line USP of GST. That means one nation, one tax. So there were many indirect taxes which we needed to pay. So because of those indirect taxes, sometimes we were paying two times same tax we were paying 2 or 3 times. Okay, so these were happening, the taxes were getting overlapped. So in order to avoid those overlapping of taxes, GST has been introduced. So now without paying you don't have to pay all the different taxes, just you need to pay GST. Okay, so it has been unified, all the other taxes has been unified, and it is based on the principle of one nation, one tax. Okay, next, GST was passed in the parliament on 24th March 2017. So it was passed in the Parliament on 24th March 2017 and it came into effect from 1st July 2017. Okay, 1st July 2017. So what were the taxes? What were the taxes that has been merged into GST? Let's see. GST has replaced many indirect taxes. There were many indirect taxes levied by center as well as state government. See, there were taxes, the same taxes was charged by central government as well as the state government also. So because of this, overlapping was happening. So due to this, GST was introduced so that there is no overlapping of taxes. So there are many indirect taxes charged by center and state government. So central level taxes that have merged into GST are as under. So these are the central level taxes. These were charged by the central government. So first one is excise duty, second is service tax, third is central sales tax. So these three taxes has been merged into GST. Next, state level taxes. What are the state level taxes that has been merged into GST? That is octroi and entry tax, purchase tax, entertainment tax, VAT means value added tax, taxes on lottery, luxury tax. So all these things had been merged into GST. Okay, so these has been merged into state level GST and that has been merged into central level GST. Okay, so these are the different taxes that used to operate, that used to function, but now we have only one tax, that is GST. So GST rate structure. What are the GST rate structure? Because the taxes are not equal on every commodity. You can't charge taxes on like 28% taxes on rice, or you can't charge taxes like 5% on petroleum, 5% on luxury items. No, this has to be this has to be properly determined. Like if the things are very necessary, if it is very necessary to be to collect tax, if these things are, if the goods are very necessary for your life, then that things does not need to be charged very higher rate. Okay, so there are certain limit for the charges. So let's see, first we have essential items including food. So food items, whatever the essential items, I didn't mean the restaurant foods, the food items, that is like rice, dal, mustard oil, onion, these things. Okay, so these essential items, the charge is 0% because it is the need of every person. These things are needed by each and every person for the sustenance of their life. So the GST is not charged on these items. Next we have commonly used items. Commonly used item, let's say toothpaste, your soap, your let's say daily use items. So these things are like commonly used. So in these items 5% GST has been charged. So only the essential items 0% GST, the commonly used items 5% GST. Next we have standard rate, that is 12% GST is the standard items we can say. Next we have maximum goods and all services standard rate. So this is the standard rate, that means the average rate we can say. You can't group all the items into different groups, right? There are many groups. So the first we have essential commodities, that is 0%. Next we have your commonly used item, that is 5%. Then we have a standard rate for certain items, that is 12%. Then we have maximum goods and all services standard rate. So maximum goods has been covered under this, so that is your 18%. Next the luxury items and tobacco. Luxury items that people don't often buy, right? Most of the people that are in need, that are poor or underprivileged people, they don't buy luxury items. So that's why the taxes has been charged at 28%, because these things are used by the rich businessmen or rich middle class people. Okay, so these are the GST rate structure. GST is paid on purchase of goods and services, and it is collected from customers on sale of goods and services. So when you are purchasing something, you have to pay GST. So now the purchased item, you are selling it again, right? Purchases means what? The goods that you are purchasing for resale. So you have purchased it, you need to pay some GST. Now that GST will be paid by whom? Customers. How? You have purchased it, now you are selling it. So while selling it, you will be taking GST charge from the customer. So that GST you will be taking from customer and you will be paying to the manufacturer or the wholesaler or whoever the dealer is. Okay. So GST paid termed as input GST. So GST paid, whatever GST you are paying is termed as input GST, because you are taking something and then you are paying. So that is your input GST. And while sales, if you are giving if you are in sales, if you are getting GST or giving GST, that is your output GST. So purchases input GST, sales output GST, because things are going out. So GST paid termed as input GST is set off against GST collected termed as output GST. Now you are purchasing something, you are paying GST. Now that purchased product you are again selling it. Now from that sale you are getting output GST. So input GST and output GST are set off. Okay, this should match or remaining balance needs to be paid off. Okay, next we have as such, GST paid on purchase is not a cost for the purchaser but is an asset, since it can be set off against GST collected on sales. So whatever the GST that is paid on purchase, that is not your expense, that is not your liability or something. Why? Because that GST amount you are collecting it from the customers. So that is your asset, that is treated as asset. Okay. So because the purchase GST are set off against the input GST are set off against the output GST. You are taking GST, let's say you are taking you have bought 1000 rupees good, and for that you are paying 18% GST, that means 180 rupees. Now that 1000 rupees you are selling it at 1200. Now 1200's 18% is how much? It will be 1200, 18%. So it is 196. Now see, you were paying 18% on 1000, that was your 180, and from him what are you getting? 196. So what is the difference here? 16 rupees is your profit, right? Because you are not selling the goods at that fixed rate. You are buying it or low rate and you are selling it at high rate. That means you are paying, yes, you are paying 180 rupees, but for that product you are getting 196 rupees. So 16 rupees difference is your profit. Okay. So this is an asset for the firm. Next, GST collected on sales is not an income of the seller but is a liability. So GST collected on GST paid on purchase is an asset, and GST collected on sales is a liability, because you are collecting it from customers and that will be paid off to the purchaser, to the person from whom you were paying, to whom you are paying the input GST. So that GST on purchase is asset and GST on sales is liability. Why? The GST on sale you are getting from other person, and GST on purchase you are paying it. So that is your money. So that is your asset, and you are getting it from someone else, that is your liability. Okay. So GST on purchase is asset and GST on sale is liability. So you have to remember this thing. Next, there are some important notes regarding GST. First, we have usually GST paid on purchase of goods and services, that is input GST is not a cost for the purchaser but it is an asset because it can be set off against GST collected. So that what we understood. Next we have, however, in certain cases GST paid cannot be set off against GST collected. In such cases GST paid on purchase of goods and services is a cost for the purchaser. So sometimes in certain cases if there is profit then it's good. If there is loss, let's say you have bought the goods on, let's say you have bought the goods for 1000 rupees and the GST has been charged as 18%. So 180 is your GST. Again this 8000 rupees product you are selling it at 800. Now the GST of 18% is there. So 18 8 how much? 144 rupees. So 180 was you were to pay 180 and you are getting 144. That means this can cancel this 144. There is a minus balance now. 36 rupees you have to pay. Right, you have to pay. In this case, you were paying 180 and you are getting 144. That is a loss because 36 rupees you need to extra pay. So that is what they said. In certain cases, GST paid cannot be set off against GST collected. Okay. So GST paid is what? Input GST, and GST collect is what? Output GST. This is purchase and this one is sales. In such cases, when such cases happen, GST paid on purchase is a cost for the purchaser. At that time, GST is not an asset, it is a cost for the purchaser. So, following are the cases where GST paid on purchase of goods and services cannot be set off. So, there are some cases where GST paid cannot set off the GST collected. Okay. So, let us see what are the cases. First is your food and beverage. Food and beverage collected. So, food and beverages expenses. Food and beverages expenses, there you don't know the amount, so that's why here the GST cannot be set off. Next we have payment for health insurance. So, insurance can be more, right? So, that's why this is also, in this case also GST can be set off. Next, third case is payment of membership fee of a club, health and fitness center. That comes under your not for profit organization. That means here also the GST can be set off. Next we have repairs and maintenance of building. Next is purchase of vehicles, free gift to staff, payment for goods and services for personal use. So, these are the items where the GST can be set off, where the input GST and output input GST can be set off by output GST. So, these are the cases. Next we have GST paid, that is input GST is reversed, credited in the following case. So, now since you are paying GST on certain cases on your purchases, so at that time the input GST is reversed. So, here there are some cases when you will get back your input GST. What are those things? First is purchase return. Now, say you have purchased some items, for that you are paying input GST. Now, you don't want that item. You feel that the item is like more than the required amount. So, now you want to return it. So, you are returning it. So, when you are returning, you have already paid the GST for that item. So, at that case the GST will get back to you, will be credited to your account again. So, that is the first. Next is goods taken by the proprietor. So, if the owner is taking the goods from the business, so at that time the GST will get back to the business. Next we have goods lost or stolen. So, that is a case of abnormal loss. So, that is an abnormal loss, that is why the input GST will be credited again. Next, goods destroyed or become not saleable. So, whatever goods that are written off, that is not saleable, that can be sold again, because these are destroyed by some uncertain events. Next we have goods distributed as free samples. So, free samples is for advertisement. So, for that purpose also your GST will be credited, your input GST will be credited. Next we have goods given away as gift or charity. So, in charity, if you are using something for charity purpose, the GST will be, the input GST will return back to your account. Next we have, there are some goods and services which are exempted from levy of GST. That means in that part you in these items the GST will not be charged. First is payment of wages and salaries. So, if you are paying wages and salaries, in that part the GST will not be charged, because on that part the income tax is charged. Okay. Next we have supply of services to government or to embassies or other countries. Since it is related to your central government, so the GST will not be charged. Next we have electricity and water bills. Here also the GST will not be charged. Educational services, health services, travelling expenses and interest. So, these are the some items where goods and services tax are not charged. Next we have the characteristics of goods and service tax. So the first point is GST is a comprehensive indirect tax. Comprehensive indirect tax means it is an indirect tax. It has been collected from the customers via your products, whatever the products you are buying, from that it has been collected by the government. So it is a comprehensive means what? It is the mixture of all those indirect taxes. So GST is a comprehensive indirect tax which has replaced all indirect tax levied by central and state governments. So whatever there was indirect tax charged by central government as well as the state government, except for the custom duty, electricity, taxes on petroleum, taxes on alcoholic drinks, and taxes levied by the local bodies, that means your municipality tax, house tax, those things. So these things are excluded, and apart from these things, all those taxes are being comprehended and it has been named as GST. So all indirect taxes have been merged in a single tax, that is GST. Next we have uniform GST rates. Uniform means the rates will be similar, the rates will be same in each and every state of India. So there are uniform states of GST across all states and union territories. This has been set by the government. This has been set by the central government. So all the taxes that are levied, it will be same in each and every part of India. Next is it is a supply based tax. GST is charged by the seller on both goods and services at the same rate. So whatever goods and services you are buying, it will be charged based on that number of commodities that are being sold or purchased. It can be charged by the seller only if he is registered under GST. So for charging, for taking or for paying taxes, for paying GST, you need to be registered under this GST. Next we have, it is a destination based tax. Destination based means it will be charged from the end person, the last person that is going to receive the product. The tax will be charged on that person only, that means the customer or the consumer. So GST is charged every time a sale is made till the time goods or services reach the end consumer. That means the person who is using the product, he will be liable to pay the GST. So thus it is a destination based tax. Destination based tax because the last person that will be getting the product, he will be paying the GST. GST paid is not a cost. So GST, whatever GST you are paying is not a cost. We already discussed it. It is an asset for the person who is paying the GST, because that GST will be set off against the output GST. GST paid on purchase of goods and services termed as input GST is not a cost, because the input GST is your asset and the output GST is your liability. So that input GST is helpful in setting of the output GST. So but is an asset because it can be set off GST collected termed as output GST. Next we have GST collected is not an income but a liability. This one we already discussed. That is whatever GST we are collecting from the customer, that has been paid by someone else, that is their money we are using. So that is your liability. But the GST that we already paid, that is your asset, because we can get back the amount whenever there is such transaction. So GST collected, that is output GST, is a liability because it is collected on behalf of the government. We are taking the GST from the customer, but this is for the government. We are not going to keep the money with us. We will take and we will pay it to government. So after setting up output GST against input GST, if output GST exceeds, it is payable to the government. So we did one example relating to this part. Yeah. So let's say you have bought a product of 1000 rupees and 18% GST has been charged. So that means you are paying how much amount? 180 rupees. Okay. So that product you are selling it. You are selling it at 800 rupees. Now you will be charging the same percentage. So 18% will be charged again. So 18% on 800 is what? It will be 144. So we were paying 180 and we are receiving from the customer 144. Now see, since we paid 180, this has been collected by the government itself. So now we are getting only 144. So there is a difference between them, 180 minus 144, this is your 36. So this 36 rupees is payable by the person who was selling the goods. That means if I am like purchasing the goods at 1000 rupees, paying 18% GST, that is your 180 rupees. Now I am selling the goods again at 800 rupees. I am receiving the GST at your 18% again, that is your 144 rupees. I have paid 180 but now I am getting 144 rupees. So there is a gap, there is a difference, that is the difference in amount is 36 rupees. That 36 rupees I am liable to pay. I cannot like say to customer that no, I have paid 180 rupees, you need to pay 180 rupees only. No, that tax is charged on the price. Whatever price you are charging, on that price the tax will be charged. So that amount we are liable to pay to the government. So GST collected is not an income and it is a liability. Next we have GST is a value added tax. So GST is value added tax because GST paid is set off against GST collected. So here is one example. For example, A purchases goods for 1 lakh and sells the same to B for 1,50,000. That means he is getting a profit of 50,000. Now let's check the GST rate. GST rate is 12%. That means on 1 lakh he has paid 12% and 1,50,000 he will be receiving 12%. So let's see. GST paid by A on purchase is 12% on 1 lakh, that is 12,000. Next, GST collected by A from B on sale is 1,50,000. Now 12% of 1,50,000 is 18,000. Now GST payable by A to government. Now these things will be charged by the government as well. So we have to pay it to the government. So now there is a difference. He was paying 12,000. Now he is receiving 18,000. So there is a difference. There is 6,000 rupees difference between the two amounts. So that 6,000 he needs to pay again, because he has already paid 12,000. Now he is receiving 18,000. So that means he has received 6,000 more. So that 6,000 we need to adjust and that 6,000 is to be paid to the government. So that's why it is a value added tax. So there are some advantages or objectives of GST. First is decrease in the cost of goods. So since there are only one indirect tax, the GST is a comprehensive tax. We know it has included all the other indirect taxes. So here the overlapping of taxes does not happen. So because of this, the cost of goods has been reduced. Since the taxes are charged only once and it is charged from the end customer, that's why the cost of goods has been decreased. So the cost of goods will decrease since tax on tax is eliminated in GST result. So tax on tax, that means what? Let's say manufacturer has produced a good and he is selling it on 50 rupees. 50 rupees he is to pay 10% tax. Now that 50 rupees he is selling it for 70 rupees to your wholesaler. That wholesaler needs to pay again 10% rupees. Now these product already paid 10% rupees. Now the wholesaler is again paying the 10% rupees on that already paid tax. So that means your tax on tax. So the tax paid is repeated. So that thing has been eliminated by GST because the GST is collected from the end consumer only. It is not collected from any manufacturer or wholesaler. Yes, they are paying, but that needs to be set off. Next, we have ease of doing business. In the pre-GST period, there were multiple types of indirect taxes. There were many taxes. So the business was required to register itself separately under each and every taxes, but after the introduction of GST, they needs to be registered under only GST. So and they don't need to don't need to pay any other taxes. So that's how it is serving the purpose of ease of doing business. So Next we have developing common national market. Common national market means since GST has been charged by the central government and state government and the rate is uniform over all over the India. So that means it is levied at the same rate, the rates are same. So that is why it is developing a common nation. For a one nation, that is a one tax. The motto was there, one nation, one tax. So, for example, electronic goods sold across India are levied at the rate of 18%. It has developed common national market. We know if we buy the product here also, we are going to pay 18%. If we buy the product in Delhi also, we are going to pay 18%. So, that is developing a common national market. So, it is a common market now. Next we have helpful to tax authorities. Now since there are not many taxes are there, only the GST is there, so calculation has become very easy. So the tax authorities has saved lot of time in it. So next we have reduction in tax evasion. So GST is administered through computer system, electronic return filing and assessment has reduced tax evasion and compliance cost. So since it is a computerized system now, so it is very easier to load all these details regarding the tax that we are charging on someone or we are paying paying to someone. So all these details get easily calculated. So this way it has reduced the tax calculations and all. Next we have goods becoming cheaper because there is no tax on tax method. There is only one indirect tax, that is your GST. Then attracting foreign investment. Foreign investment was hindered because of the multiple indirect tax. Now GST has removed all these things and because of the introduction of one single tax, the foreign direct investment in India has increased. So tax system has become more transparent, regular and predictable. So these things have become regular. So we know how much we need to pay and how much we need to receive or how much it needs to be set off. So these things have become very easy. Before that the tax calculation of tax were very tough and this became one of the most important reasons of fraudulent activities. Nowadays it has become very transparent. Everybody knows the rate of GST. Everybody knows where to pay the GST and it will be registered under your system only. So this way the frauds has been minimized. So with this topic we will end our class today, and in the next class we will discuss some more and we will do some illustration regarding the GST via journal entries. So till then, take care.